think we're streaming. I think we're good to go.
All right. Thank you, Rishi. So, hello, everyone. NOBE members, welcome. I'd like to start. This is the first webinar of the 2018-2019 school year. My name is Andrew Quinn, NOBE's National Executive Board President, and a Global Portfolio Manager and Researcher at AQR Capital Management. The title of today's webinar is I'm an Engineer, is the Investing World for Me? This will have a focus on applying the engineering skill set to investing, and thus will have a direct message to the engineers in the audience. But I'll put out a strong caveat that the webinar will by no means be exclusive to anyone else interested in the overlap of engineering and business and how it applies to the investing world. Note that everything I say today is speaking on my own personal behalf and has no ties to AQR Capital. And with that disclaimer out of the way, Rishi, I'll pass the mic over to you. And before I get there, just wanted to say Rishi is the CEO and founder of Tiingo. Very excited to have him on board. All of you have heard of Tiingo before, as Tiingo has graciously sponsored the stock market game for NOBE. And with that, Rishi, take it away.
Thanks, Andrew. So for those of you who have not met me in person, maybe we've exchanged emails or the like, I am the CEO and founder of Tiingo. It's a financial data and analytics platform, specially built for equity research. And I'm excited to be on the show today because I'm probably like many of you, I was not a typical finance or accounting major. I originally came to university thinking I was going to do a chemistry PhD. Then I thought I was going to do medicine. And then I realized I loved markets so much, I ended up being a trader at a bank, then a hedge fund before starting Tiingo. I didn't think the financial world at the time as a student was open to non-traditional backgrounds. And then I realized it was all about how you positioned yourself, both in skill sets and marketed yourself. So I hope I can share with you all my experiences as somebody who went from more of an engineering background into financial markets route. Although technically, I should make the caveat, I was a liberal arts major. They didn't actually have data science back in the day. So I actually created my own major called quantitative modeling, which was a mixture of business engineering and liberal arts. So I guess now it'd be called data science. So still non-traditional background and was a software engineer before that. So hopefully I can shed some light.
All right, thank you, Rishi. So as you can tell, we have a exciting duo in front of you, and we're excited to dig into the webinar and the topics that we're planning to address. So to give an overview of what we're going to be talking about today, I just wanted to start and set the agenda. As we mentioned, the topic is using an engineering skill set in the investing world. So 3 areas that we'll dig into are career advice and potential career paths in the investing world, how to begin thinking about and learning more about investing, and then the 3rd area is tools available to the individual investor. At any point throughout the webinar, feel free to toss out questions. You should have chat boxes in front of you. If you want to ask a question, feel free to type them in. We're happy to interject and answer your questions as they come in. As we mentioned before on the email, we'll also be offering a time at the end of the webinar for questions as well. So feel free, if you want to save them for later, you can do so. Otherwise, again, at any point in time, let us know. So, Rishi, founder of Tiingo.com, you have an engineering background, as you mentioned, not traditional. How did you get to where you are?
Okay, yeah, so by the way, just to make sure the plug is right, Tiingo with 2 I's, Tiingo.com. No, but the way it actually started was I actually originally thought I was going to do a chemistry PhD, and part of it was in high school, you only have the sciences, right? Schools don't teach you financial market, that type of thing. But I was really into the markets. I would read up about it. I would read like tech forums and then start comparing that with stocks. But I didn't know there was really a career in it, to be honest. I didn't know that was actually a thing. I knew there were traders, but I thought they were loud and like shouting all the time. It wasn't really my personality. So I actually started off at NIH doing chemistry research. And then when I got to college and I was 18, I could open up a brokerage account. I started doing it and I was like hooked. I wouldn't study for exams. This was probably around 07 to 08 where markets were going crazy. Things were falling. Things would be up and down 15, 20% in a day, especially financials. So it was all around an exciting time, I guess. I remember my first trade, I think I bought NVIDIA, and then they announced earnings 2 days later and it fell 25% in a single day. So I originally just, I don't know, something hooked me, so I couldn't focus in class. I would trade during my chemistry classes, all that type of thing. And eventually, it turned out that David Shaw, who runs the Shaw and Company, a hedge funder, ran it, was actually in computational chemistry, the same field I was, and he came from markets. He sort of, instead of going from market chemistry or quant to markets, he actually did the reverse. He came from markets, took his $1 billion, started a chemistry lab, reached out to him, emailed him. He was coming to DC where I was at the time, and we met up, and he actually met me up. You know, who would have guessed? Sometimes you never know where an email and 10 phone calls, now is an email and like 2 phone calls, will take you. And then from there, I did an internship as software engineer by a company funded by a hedge fund manager, a quant fund manager. Then I was like, all right, I'm going to do it. So at the time in '08, no one was really hiring. So I downloaded a list of hedge fund managers in Virginia. There are not too many of them. And cold called every single one. And then finally, I ended up at Citigroup as a sales and trading analyst. And a year and a half later, joined a startup hedge fund as the startup quant fund as the first employee. And after a year and a half, the fund did well, and I don't know, decided to do other pursuits and started Tiingo. So it's been a storied past, and I think one thing that I'm skipping out right now that I'm sure we'll touch on later is all the challenges that came with each one. It wasn't as seamless as it makes it sound, especially in '08 when no one was hiring. So hopefully, you know, we'll definitely get into that. But Quinn, I actually want to ask you something. Technically, you were not an engineering major, based on what I know about you. But you're the national president of National Organization of Business Engineering. What's the story here? Curious.
It's a fair question. So engineering was actually my major when I came to school.
Oh, I didn't know that.
So I was a chemical engineer when I joined the UW Wisconsin-Madison school, and I really enjoyed math and science growing up. I thought that was the area that I wanted to pursue, and quickly realized through other experiences that investing was also a side interest that I also wanted to pursue and was very interested in. Really since middle school, did some stock market simulations, did fairly well in those, which ultimately sparked my interest and kept my interest going. Then I ultimately traded currencies since high school, so got quite involved with looking at more of the macroeconomic area and trying to figure out what drove currency prices. And as a high school student, you don't know too much about that. So it was a great area to dig into and get interested in the field. But the engineering interest was something that I thought I would be able to apply my interest in the math and sciences and really an educational aspiration. And when I went to my guidance counselor at Wisconsin and asked them, can I double major in engineering and business? They told me no. And I pushed and said, I have enough AP credits, I could easily do this. And they said, no, by the time you do it, you might as well go get your master's. Regardless of what I tried to do to convince them, they said no. And I very quickly realized that I had to pursue one or the other. I could go the engineering route, which I thought I would enjoy, but I knew with certainty that the business world is something that I've always been interested in and eventually wanted to get into anyway. So I decided to go the business route, ended up triple majoring in finance, accounting, and economics. So went full head first into it. And with that being said, I definitely was still interested in the engineering world, in all aspects of the math and sciences. I think the skill set engineers learn is very applicable to any field, especially nowadays. So really realized that I wanted to remain involved. When I got to Wisconsin, the year was 2007. So we'll let you guys do the math of how old I am. But that was the year NOBE was founded. So Wisconsin had just created a NOBE chapter, and there were board positions available for anyone who joined NOBE that wanted them, which was great as a freshman coming in and joining an organization that had this joint goal of uniting the two fields of business and engineering, something that Wisconsin wouldn't let me do. So it was a great area to have this extracurricular activity that allowed me to get a leadership position right away, but also really create an entrepreneurial environment within that, and again, joining the two fields of engineering and business. So it sparked my interest in NOBE. It sparked my interest in getting more and more involved as time went along. So my junior year, I became the president of the Wisconsin chapter. From there, my senior year, I became the national finance chair. Very quickly realized that I wanted to continue moving up, and eventually was elected. Now it's been 5.5, almost 6 years ago, was elected the national president of NOBE, and had very much enjoyed the role. There's always more that we can do to keep NOBE moving forward, but very excited to have opportunities like this, obviously, to talk to all of NOBE members, and really make NOBE the organization that I know it can be. And what excites me most about it is you guys, the NOBE members themselves. It's amazing every year at the national conference talking to you, getting to see people that attend that. And Rishi was quite fortunate this last year to join us as well. And we're excited to be going to McGill University this year for the national conference, and hope all of you can join us as well.
Yeah. So, okay, that, I get what, first of all, NOBE conference was awesome. I hope you all do make it to Canada. I'll try to make it there. Just
we hope so.
Yeah, I mean, it should be a ton of fun. I've never been to McGill. But on that note, how did you make this jump from somebody I guess we can't beat the engineering out of you, or the system can't take the engineering out of you. It's always going to be there, so it makes sense why you're at AQR. But how did you actually get into that as a full-time career? Like, how did you, AQR is a very, very quantitative role. I'm surprised they even took someone who's technically not an engineering major. How did you get into this firm? And also you said global macro investing. What is that?
Yeah, certainly. So AQR Capital Management, just to give a quick background, is a large quant systematic asset manager. So what that means is we use quantitative tools and systems to build investing strategies. We build them across a number of different facets of the asset management world. So we create different mutual fund structures, hedge fund structures. Ultimately, we're looking for alpha where we can find it, but we're also finding beta and what we call smart beta opportunities as well. And without digging into the little details there, I would strongly recommend reading and Googling more about all of those, and perhaps we can touch on some of that later. But I think the goal of AQR is to manage other people's money and find ways to obviously make returns for that client money. The global macro world within AQR is where I sit, and I sit in kind of a unique role within AQR where most of the firm is quant systematic, but my role is actually more discretionary. Now, those two words are quite different within the asset management world, where quant systematic researchers and portfolio managers are again building more of a algorithm-based approach to investing, more of a systems-based approach. I think algorithm gets a misnomer within the asset management world, where people start to think about higher frequency trading and things that are much more rapid. Algorithms can really just be thought about as a process, putting a system into place and creating code around it to run that system. Discretionary is the other side of the world, where we're looking at things on a fundamental basis, as we do in the quant systematic world. We're looking at it, though, in a discretionary manner, looking at it in a way that we have decision over how we want to react. We still try to be very process driven. I think some of the best discretionary managers are very much process driven, but we do not have that coding framework around it that makes it less bendable. So we're able to adapt to situations in a way that a quant systematic strategy may not. But obviously, the end goal of a quant systematic strategy is to adapt to all market events and news. Discretionary just allows a little bit more flexibility, where we're able to make decisions in a one-off way. How I got there is a very good question as well. So started doing internships in college. As I mentioned before, my interest kind of sprung from stock market simulations in middle school, and those internships throughout college were in the commodities realm, so a brokerage firm and a prop trading firm. And then it sprung into a internship at Citigroup, where I worked on their internal hedge fund, which was the hedge fund that Vikram Pandit, who was the CEO of Citi, brought over to Citi when he became the CEO. And that was a great experience, digging into a $2 billion long-short equity fund, learning more about how portfolio managers thought about what a good business is to invest in, what unattractive businesses were to potentially short. And From there, got a full-time offer to come back as a analyst, and that's where I was quite fortunate to meet Rishi, who was also at Citi at the time. And we both worked in different groups, but the groups I worked on, one year was in risk arb event driven special situations investing, which is a, I'd say, a fairly classic hedge fund strategy where you're looking through a lot of legal documents. You're wearing many different hats of being a lawyer, a investment banker, a consultant, a trader, all in one. You're reading through these legal documents to try to find little details that you think the market may not have caught. One thing that it really taught me was markets can be inefficient. And that, I think, is a lesson that in textbooks in school they don't necessarily teach you. And it taught me that there is news out there, there is information out there, which ultimately is what markets are reacting to, that they may miss. And so if you do the work, if you work hard, and you dig into details, you can find opportunities, or what we call in the asset management world, alpha. And so that was a fantastic first year at Citi, and then my second year was in short-term rates trading. From there, I transitioned to my current role at AQR, which is the discretionary global macro world, and there I'm really looking at all asset classes in all countries and trying to find what macroeconomic news could drive asset prices. There's many different types of assets. There's fixed income, which is basically looking at an asset that will spit off a consistent return, assuming they are able to pay that back. So bonds and mortgages are some of the traditional fixed income assets that you all may be familiar with. And then looking at commodities. So one of my favorites is live cattle. And it's a great market that, being from the Midwest, I have close to heart. And then currencies, as I mentioned before, and equities is another area that we do focus a lot of time on. So you've probably seen recently the headlines that equity markets have been fairly volatile. We're paying attention to what's driving that. Is it likely to continue? Are equity markets going to continue to sell off, or are they going to rally moving forward? So it's a fascinating role, and really doing this across all different countries across the world. And looking at the macroeconomic variables that are driving those countries. But I'll pause there because Rishi, I've talked about how I got into what I'm doing. For those on the webinar, some people may be questioning, is the investing world for an engineer? And to start, obviously, you need to know what is the investing world? What exists out there? What are potential opportunities? So maybe you could walk us through, if you're considering a career within the investing world, what are the different career paths that you could pursue?
Yeah, and this part can get a little bit confusing because an analyst may mean something different depending on what type of firm you're at. So quickly, I guess before we dive into this, we should probably go over those. So you may, when you're looking for programs outside of school, see something such as a sales and trading analyst. And you'll typically see this at investment banks. And this type of trading is different than buy-side trading, which I'll explain in a second, or the type of trading Quinn does and I did. And this is where both of us started. We started as sales and trading analysts. And trading at a bank is, you're essentially a market maker. If someone wants 100 shares of Apple, you have to give them a price that you'll buy at or sell at, and you have to stand on either end. And if they want to, if they want to lift you as in you sell to them, or they want to hit you, in which case you buy and then they sell to you, you have to be ready. And that type of role can be a risk management role, in that you have to, your client is a hedge fund. Your client is somebody who wants to purchase or sell some sort of asset. And the salesperson, that's the trading side of sales and trading. The salesperson is somebody who maintains that relationship with clients. For example, if PIMCO has a ton of bonds they want to sell, that salesperson will talk to the client, figure out what ideas may be good for them, help them find research, and also when it comes time to execute the trade, they'll interface with the client, PIMCO in this example, and then they will bring that order to the trader, and then you execute it. Okay, so that's sales and trading, and a lot of banks have sales and trading programs. It's a structured program, generally for 2 years, in which case they train you, they get you licensed, and then they put you through different rotations. You might try different desks. For example, maybe for 6 months to a year, you might trade FX, and then 6 months to another year, you may trade equities or bonds. So they get you to rotate a bit. And then the other opportunity, so that's sort of, the other opportunity is investment banking. Now it's confusing. We said investment bank, and now we're talking about investment banking. So an investment bank is someone like the Goldman Sachs, the Citigroups, the Morgan Stanleys, JP Morgans of the world. And that's different than a commercial bank. Commercial bank is where you put your money in, you store it, savings account, checking account. So we're talking about the investment bank. Investment banks help clients buy and sell securities. They help companies IPO. They help structure debt deals. They do all these types of things. And you have the sales and trading side, and you have the investment banking side. So sales and trading side is public-facing markets for the most part, and the investment banking side, let's say you want a company to IPO. In that case, maybe capital markets. So maybe another example might be a company wants to be acquired, or a merger or an acquisition. You would help value the deal, price the deal, get that going, and then serve that to the client. And then you would essentially pitch the client. So it's more of like a different type of work. Now, typically people can go from sales and trading to hedge fund because that maintains a public facing. If you start investment banking, people typically go into private equity or venture capital. These rules are not set in stone. It's just private facing versus public facing. And then the buy side, which is what you might hear as a hedge fund, you might hear as private equity, you might hear as asset management. This is like a very broad sector, because whereas you have a hedge fund, which tends to deal with public facing assets, you also have private equity, which is private facing. And private equity might be you find a distressed company, and then you maybe take it private, or you purchase it and it's not listed on any stock exchange, and then you reorganize it and then flip it or sell it for more. In very crude terms, those like house flipping shows, it's like that but with companies. And they do other things too. That's not the only, private equity has a bad rap for that, but they actually do a lot of things, and there are a lot of private equity firms that, like anything in the industry, they're shades of gray, and so you have to determine what you feel comfortable with, what makes you feel good. And before I digress into that, you also have asset management, which is typically like, something like a family office. Or asset management, you might face someone who's like, okay, how do I deal for retirement? Or if you're very wealthy, like let's say your client has 250 million, your full-time job is to manage their money, and you might decide what hedge funds to put them in, what mutual funds, what index funds, how to allocate their money to meet their goals. And just a quick heads up, among each of these sectors, there's also many other types. For example, in hedge fund, Quinn had mentioned global macro. You also have funds, and that's called a mandate, so basically what the fund can do. And then you also have funds that might just only trade equities. That's typically called long-short equity fund, and their mandate is only equities. Global macro tends to be the broadest mandate, and even as Quinn alluded to, within global macro, you might have quant global macro. So this whole space can be divided in many different things, and how you navigate it, that's the difficulty. And so Quinn, I kind of want to turn it to you here, now that we kind of have an idea of these very broad strokes, and hopefully if you guys need any more clarifications, type it in the chat, or Google it, or email us later. But now that we know about who the players are, the career paths, what do you recommend to someone who has no investing experience, who maybe everything I just said went over their head? Because I would definitely fall within that. And also, can you also go over the big players that do this for a living? So can you go over the big players that do this for a living, and what someone can do to learn more?
Yeah, certainly. So I'll start with the big players, and I think you mentioned a few of them, but it's helpful to think about, again, who are the end clients of the money that people are managing within the asset management world. So if you're a company and you're looking to be acquired, obviously there's M&A that can occur. That is one company looking at another company to potentially buy. Those are the two players, are the underlying companies, and the investment bank and the investment bankers are the one advising those companies. Within the asset management world, we have a number of different clients that we're managing money for. You can think about retail. So, retail investors have money that they save from a job that they earn. In the end, one way to think about the world is there's human capital, and then there's there's actual capital. Capital can be equipment in a factory. Human capital is you and I, people that eventually will have careers and have incomes. We as human capital earn financial capital, which is what we use to invest. So think about our lives, draw out a chart, and really at the beginning of your life, you have a lot of potential. That's human capital. In the long run, you have more financial capital that you're building up, and your human capital is going down because your ability to continue working as you age goes down. You may have desires to retire, you may have desires to travel the world after you've made enough money and can safely do so. That framework, though, is a really great way, I think, to think about your life and how you are entering the working world. But in the end, the capital that you're building, that financial capital, you want to do something with it. You want to earn some sort of interest, some sort of return on it, so that you can continue to do the things you want to do, and ideally, obviously, turn that capital into more capital. And that's really where the investing world comes in, is you're trying to take your financial capital and earn some sort of return. There are institutions out there that also do this. So you can think of sovereign wealth funds. The Middle East is a prime example where they have a lot of oil revenue. They save that revenue and they turn it into financial capital that they can use to invest. Pension funds is another one. So saving through a company, they can put that into a pension fund, and the pension fund will invest that capital for its employees, who will then get in retirement. Family offices is another one. So individuals who've built businesses and have potential high net worth individuals, they can use the structure of a family office to do investing as well. And then one that I think is quite interesting is central banks. So central banks like the Federal Reserve can also be investors and owners of capital. So think about a few unique situations. The Swiss National Bank has intervened in currency markets for some time. They built up a large amount of foreign currency reserves. They actually will invest in the stock market as well. The Bank of Japan is another one where they actually build up a very large balance sheet that they use to invest in Japanese ETFs and Japanese JGB government bonds. And they manage assets as well. So you think about all these different players, and there's a lot of depth we could go into on each one of them, but I'd strongly recommend taking this high level overview and digging into specific areas that you think are interesting. I'm gonna just skip your first part of your question, and I think we'll get back to it later. But I wanted to turn around to you and just ask that, now that we know who all the players are in this market, what the landscape is of the investing world, for an engineer who doesn't know much, what would you recommend they do to go about learning more about the industry?
Yeah, so as an engineer, here's going to be your problem, right? Or someone who doesn't come from a typical background. You're not going to learn this through osmosis. You're going to have to go out of your way to research this. And for those of you who are thinking trading, I don't even think they really teach it in school. They'll try, but the best way to learn anything, I think, especially in a world, it's sort of like, saying learn about trading is saying like, or what kind of trading do you want to do is like asking what kind of art do you want to do, right? Think of trading like artwork. There's so many different styles, right? You can have painting, then among painting you can have like watercolors, you can have pastels. I don't know enough about painting to continue this, but same with sculpture. You have so many different styles, and how do you learn? Well, it's by exposure to these different styles, and one way is by reading. I recommend, first off, a great series of books to start are the Market Wizard books. There are 4 of them. I believe it's Market Wizards was the first one, probably written in the 80s or 90s. Then New Market Wizards, then Stock Market Wizards, and Hedge Fund Market Wizards. And the reason I recommend these books is that they interview top traders, and you can see their styles. You can see how they approach markets. Some are quantitative, some are fully algorithmic, and some are fully discretionary, or but they all have a process. And when you read about each one, you might find yourself relating to one or the other, and that's a great place to start. So once you find one you might relate to, these books, they profile pretty famous traders, so there are going to be tons of resources about that trader online. You can read blog posts, you can read people who've tried to replicate them, or followers of that type of trading. So read, And then once you read, practice, practice, practice. If let's say you're into an algorithmic style of trading, start building your own algorithms now. Find ways to integrate into data sources. There are tons of them. Tiingo, my site, we have like an API that's free to use for the most part, and if you want 70,000 tickers, it's like $10 a month. But for the most part, the free tier will probably help you, and we're not the only ones. There are tons of data providers out there. Start integrating with data. Start making your own algorithms. That's definitely what I did in college. And then meanwhile, get out of your comfort zone. Maybe read about fundamental analysis. I remember I read Benjamin Graham, who was Warren Buffett's teacher, security analysis, just the equity portion. Bonds I didn't really understand at the time. But I read the part that was interesting to me, and I was also trading, and you'll find that they help you come up with ideas for both. And you may find that the type of trading you're into, nothing to do with your background. For example, if you're a hardcore software engineer, but turns out your style of trading, you love fully discretionary, you love reading balance sheets, you love learning that type of stuff, that's okay. Often you'll find ways to intersect the two, because if you were interested in software engineering, there's probably a part of you that still likes it, but you might also really like fundamental analysis. And right now, there are not too many people who marry the two, right? There are not too many people who are combining the two. There are a number of them, but not really in the long-short equity space. You might find a long-short equity fund that would love a software engineer. They could teach you how to look at companies, and then you could code things up to help automate or help find opportunities, right? So start marrying the two concepts, and then when you're applying to jobs, have them in your hands. When you start cold emailing, be willing to work for free. Be willing to mentor someone if you can. If you can't, then just cold call everyone, ask them just to learn. If you're a student, everyone is sympathetic to students. If you're saying a student, I'm trying to learn, that's like pulling on the heartstrings. And so after you do that, just start reaching out to people. And what if you're saying like, okay, I like pure fundamental analysis, or I like this type of trading, I'm not an engineer, my background's totally different, and I hate my major now and my life sucks. Well, get over it, right? You're a NOBE, you're probably innovative, you're probably a creative person, and clearly you're going out of your way to learn more. So find a way to coast through college. I know this is horrible non-PC advice, but find a way to coast through college, but don't coast through life, right? Do what you need to graduate, but make sure you're going out of your way, talking to other people, trying to work for someone else, constantly reading. All that time you're saving by maybe like taking the bare minimum credits, don't just put toward partying. In fact, that's a horrible idea. Put it toward enriching your own knowledge in a way your university may not be able to serve you. I mean, that's certainly what I had to do when there was no data science thing, right? You have to find your own opportunity, just don't give up. And sometimes it just happens that it's too late to change majors and you're locked in. So graduate, but do whatever you can. And Quinn, I know you had a different path, you had a different background, so I'm going to ask this question to you again because I really want to press on it because I'm actually genuinely curious now. I only met Quinn post college, so I don't know about your university days. What would you recommend to somebody who has no investing experience?
Yeah, so I thought your insight was fantastic, and I will second everything that Rishi said. I will add a few things in terms of starting with a macro approach. The macro approach I would say to consider when approaching the investing world is, where do you think your skill set fits best? So you know yourself better than anyone. If you very much love the math and sciences and that's why you became an engineer, you're a very good programmer, there are skill sets and there are opportunities that those skill sets will fit. I would say programming is something that nowadays is becoming more and more prevalent, and I work with many very good programmers. That's a field that I think is important to have an understanding of at all levels, no matter what individual you are today, whether you have an engineering background or not. The reason being is more and more of the investing world is becoming a process-driven approach, and whatever you're doing within a investment manager, you have the ability to add value by coding and making a process more automatic. You make it more efficient. You can bring down your fees that you charge investors or charge clients because you can do it for a more attractive rate than someone else. And I would say in general, you got to figure out also how you can leverage what you already know to investing. So if you're someone who is very good and thinking about creative ideas in an entrepreneurial way, Investing is applicable there because you can take your creative mindset and say, I see a business that is doing something that I think is very different than someone else, and here are all the creative things that you could do. There's a sector of the investing world, the hedge fund world, called activist investing. I'd say some of these people are the most creative, who take ideas of what a business could do and what a business can be, and they really restructure it. And private equity firms is another area where people will restructure businesses in creative ways to really maximize their full potential. And so you can use that creative mindset in that kind of way. If you're a more process-driven person, obviously feeding in large data sets. So thinking about unstructured data sets, how can you apply that unstructured data to find potential investment opportunities? Pursue these avenues that you think fits your personalities best. Other than that, I mean, I'd say that the easiest way to learn, and to touch on, me in college, my junior year when I was the president of NOBE, one thing I introduced at Wisconsin was a event called Members Teaching Members. This was a creative way, I thought, to get members really teaching each other about what they know. So if you have a member at your NOBE chapter who is very into investing and knows a lot, maybe they're a business student, maybe they're an engineer with that kind of background and interest, leverage that internal knowledge and have them teach you. Have them teach all NOBE members. If you're someone who is a very good programmer, who may know Python, SQL, have that individual teach other individuals that skill set. I've found personally that being able to teach someone is the best way to reinforce what you know, and it benefits all those people around you as well, and you'll often find that there's very much of a give and take in that kind of approach. So I'd say one way to really further your knowledge of investing is, keep reaching out to people that know more than you. I think that's one way to certainly set yourself apart. And through NOBE is meant to be entrepreneurial, is meant to have members do things like this where you can, learn from others that are bridging the two areas. So reach out to business students who may not be a part of NOBE, try to get them interested, try to have them join and teach, and vice versa, show them what you know, and as an engineer, teach them skill sets that they may not have. That bartering system is a fantastic approach that I found worked at Wisconsin quite well, and I think can work for all NOBE chapters. So with that, I wanted to approach our last topic, which is tools. So I think NOBE members listening to the webinar today have learned a lot about the different career paths. The paths that Rishi and I took ourselves, have learned about how to learn more about investing, but let's get into specifically the tools that someone can use to eventually get into investing, to learn more about investing. So Rishi, tell me, what tools would you recommend to somebody who is newer to the investing world, has a skill set that could be very applicable, but may not know how to apply it?
Yeah, I mean, I think the obvious answer here is I'm going to plug my company, Tiingo. Oh wait, look, it's just already here. Who would have guessed? No, but before I get into that, which we will get into that, I really think I made a podcast which was on iTunes, top rated, and you can see it on the site, podcast. I recommend, I created this because I literally was coming from engineering, had no idea where to start. Start from episode 1, work your way up. It pretty much explains everything from what is a stock to hedge fund strategies. I literally made this because everyone recommended to me Intelligent Investor. So complicated. I had no idea. It was just such a dense read, and I'm like, how is this the first book people recommend? So I literally made this podcast so you could eventually read Intelligent Investor and bridge that gap. And then also, obviously, there's Tiingo. And for those who don't know, we sponsor the NOBE game. One way to learn about if you like markets is to actually do it. So if you go to tiingo.com/NOBE, it'll redirect you here to this page. And here you can join the game, and there's a cash prize for NOBE members, depending for the first through third place. And then when you actually check the game, oh wait, I should show you this. If you go to tiingo.com and you type in NOBE, it'll take you here, and then you can join the game here, and then you can go to the overview, and there's like a leaderboard, So if you click on the NOBE one, you can see everyone who's participating. Wow, so far the people who've made no trades are at the top because of market volatility. Yeah, so play around on the site. I'll make it a bit short. You can just look up equities, and we put a lot of the data here. If you join the game, you'll actually get access to the premium package, which will unlock all the data. If you're an engineer, check out the API. It has a lot of real-time data. So for those of you who are into that, we actually have the raw fire hose from IEX. So you'll get tick data, nanosecond level resolution data. A lot of fun to play with. Especially if you geek out on that. And real quick, I do want to say, I know I'm talking a lot about software engineering. I do want to say, even if you're a different type of engineer, there's a place for you in markets like biomedical engineering. I remember being on the street, they wanted someone to cover healthcare derivatives. There are only like 8 to 11 people who do it on Wall Street at banks. And it's because it's hard for them to find people who know it, If you're a biomedical engineer, think of all the stuff you read about. Think about the white papers you read about, the feasibility of the technology. That's great, but you might not know the financials. So there may be someone you can team up with and learn about the financials, and then therefore you have 2 pieces. So I know I talk about software engineering, but even if you're a different type of engineering, the sector needs you because they need to decipher a lot of this. Anyway, with that quick aside, I'm going to ask you too, Quinn, because I know you have different perspectives. What tools would you recommend?
Yeah, so aside from Tiingo, which obviously is a fantastic resource, I think, for anyone to pick up and learn more about, and strongly recommend the podcast that Rishi has on there as well. I think they're fantastic. I would recommend something Rishi said earlier, which is read. Newspapers, pick up the Financial Times, Wall Street Journal. Most schools have paid subscriptions to these resources. Leverage those. Ask your counselors at your university how you can access those and share those with other NOBE members. Investopedia is a good public resource on the internet that also has a ton of different resources to learn more about anything across the investing world. A book I'd recommend is Efficiently Inefficient. This is a book that I thought did a fantastic job, and something that I wish I had read in school but came out after I graduated. It's a very good academic approach, I think, to the investing world, and really hit home with me of how best to think about markets, where economic classes will teach you about market efficiency, but in the end, markets are not truly efficient. There has to be some sort of inefficiency to allow asset managers to exist and charge a fee. Otherwise, there would be no point of charging a fee if you had perfect efficiency. Otherwise, you just get market returns, and it wouldn't be worthwhile. So the book digs into all of that in much detail, but I thought was done very well. In general, I'd say just one of the keys to investing is to always keep an open mind. Allow yourself and your beliefs to be flexible. Think about the long term, and if short-term events may be skewing that long-term reality. So you're thinking about a business and some short-term event impacts that business. Think about, will that business be around in 20 years? I think there's a huge gap between short-term thinking and long-term thinking. Some of the best investors, Warren Buffett, are very much long-term thinkers. They find businesses that they can hold on to for a century, and those businesses will be around and profitable over that time. So have that kind of mindset, of the long-term mindset. If you're an investor, if you want to do trading, you have to think about the short term and obviously try to find opportunities in the short term. But keep in mind that those are 2 different worlds, trading and investing. In addition to that, think about disruption. How can new technology, how can the things that you're learning in school be applied to businesses that may take traditional businesses and compete in a more efficient way? And in the end, how can they change the landscape? So never stop learning, always continue to keep pursuing. I think, as Rishi and I have been talking about today, obviously, learning and having an open mind, listening to webinars like this, obviously, is a fantastic way to learn more about investing. So with that, I wanted to turn it around to you all and ask, does anyone have any questions? We're happy to address anything that you may have.
If you email me instead, I'll probably take forever to get back to you. So now's a good time. I know he will too, probably because we have lives. I'm just kidding. No, but if you have any questions, now's the time. But until people are thinking of their great question, yeah, I think what you said about open-mindedness is amazing. I think that's so crucial, and I think everything you do in business, you have to keep an open mind. I mean, so many ideas, we don't know if they'll work or not. Often it's the execution of it, and process-driven, which you also said, Andrew, is incredibly important because you can always improve a process, and sometimes that just starts with keeping a trade journal and seeing how you do. And if you're not doing well, that's a process you can improve your investment process. So far, the comments we got looking good, fellas. Nice. We are looking good. Thank you. Love the topic of this webinar. Okay, you have a question. Go for it, Mohammed. I feel like we should have some music. Don't like silence on a webinar.
Yeah.
But also, this is our first webinar, or I guess NOBE's first webinar. I'm here as the guest.
And we very much appreciate that, Rishi, and we're hoping to continue these webinars. So in the future, stay tuned. We will definitely be sending out future emails with other NOBE alumni who have fascinating stories and topics that will be great for you all to listen in on. And here we got the question. So Mohammed is asking, how is crypto trading different from stock market trading? Rishi, you want to take that one?
Sure.
You have some experience there?
By the way, the Tiingo API actually has crypto feeds if you want access, want to play around with that data. But sure, crypto. So that actually helped me pay for my now wife's engagement ring at the time, crypto mining. So special place for me. And how's crypto trading? Well, okay, so here's the thing about trading, and this is commonly said. If you can trade one asset, you can trade any asset. And I always thought, like, okay, the same strategies work in every asset. No, it's what Quinn said, the process of trading. If you figure out how to make money trading stocks, you can apply a similar process to crypto. For example, and what I don't mean is obviously certain things in live cattle won't work in crypto because it doesn't exist, but the same type of thinking. So when you get into how are they different, I think there are a couple ways I think you may be asking. It could be, how is crypto trading different than stock market trading in terms of how the asset trades, and then you also have maybe structurally, how are they different? So how they trade, right now, since crypto is a wild west, you have more ARB opportunities, which means Bitcoin may sell at you can buy, let's say you can buy Bitcoin, I'm just throwing random prices out, you can buy Bitcoin on one exchange for $6,000 and sell it on another exchange for $6,500, locking in a $500 profit. Because crypto is a little bit more of the wild west, there are opportunities that exist like that, and they used to exist in equities, but high frequency funds have sort of diminished that quite a bit. So crypto is, because it's still less developed, you have less SEC protections, less regulations. Exchanges have been hacked multiple times. I mean, it is a very wild west, and you're seeing hedge funds now starting to break into that space, but not necessarily in a big way yet, because it's not certain where that future is. You're seeing more private money, like maybe high frequency funds or prop shops, so they don't have investors. It's just the people who started it, their money. They're a little bit more willing to take the risk. Those institutional players might be in a bit more. But I think the institutional world is still trying to figure out what to do with it, because there's a lot of risks with it. Like when an exchange gets hacked, what happens, right? And then you have exchanges like Gemini and all these other people coming in who are sort of trying to bring the legitimacy that maybe the bigger exchanges have. But like I said, it's a bit so it's a bit different in terms of, I mean, they're just so different in terms of how they trade right now. But I think as crypto becomes more institutionalized, as regulations come in, as exchanges become a bit more robust toward these types of things, you're going to see equities and crypto probably trade similarly. Different fundamentals will move the two. For example, stocks will trade differently than currencies in the same way crypto will be in there. But eventually, if you apply that same mindset, probably figure out how to do it. So really, like, yeah, it's tough. Like, how is crypto trading different than stock market trading? That's like asking how FX trading differs than stock trading. It's a tough question to answer. If you have a more specific question, I can probably get into it. But yeah, any thoughts?
Yeah, I'll just add that stock market trading is the typical thing you think about stock market trading is done on a public exchange. So the regulatory environment is quite different than crypto, which is, as Rishi said, a little bit more of the Wild West. They're starting to figure out a regulatory environment around it, but it's still fairly new to the point of it hasn't been fully structured. The other thing I would say is, think about trading in general is it can be done with anything. Think about the ancient times where people traded stones. People traded one crop for another crop. People traded silk from India. All of that is trading. We have approached the modern era in a much more regulatory, stringent environment where trading that we think about stocks is on a stock exchange, which is, again, a institution that's been structured to allow trading to be done. Personal experience, personal story was in college I traded football tickets. So Rishi talked about arbitrage. There's arbitrage opportunities in football tickets. So at Wisconsin, all football games were sold out, which I realized was a opportunity if you could get a hold of tickets at below market value or even market value. Typically there was excess demand for those football tickets. So realized also that Craigslist and Facebook are two different marketplaces. Facebook is a more open marketplace where you know who is on the other side trying to sell football tickets, trying to buy football tickets. Craigslist, though, is more anonymous.
Do you want to talk about the time about those Super Bowl tickets? Or
there was another one. So Super Bowl tickets, there were options on Super Bowl tickets that you could buy online, and teamtix.com was the website. Unfortunately, they're no longer around. But you could buy an option to buy Super Bowl tickets at face value if the option that you bought, the team that you bought, made it to the Super Bowl. So looked at the expected value of what I thought a playoff team would be able to sell in this option market versus what they were trading at the beginning of the season. So the Seattle Seahawks this year that I did this were heavy favorites to make it to the playoffs at the very least. They had a fairly easy schedule, seemed like they were likely to win their division. Their options were trading at a relatively cheap price compared to where I thought the options would be trading in the playoffs if they made it there. So bought these 8 of them, which is the most you could buy at the beginning of the season, held on to them until the playoffs, and the Seattle Seahawks made the playoffs. Started to think about if I wanted to liquidate these. Now, one thing to always keep in mind about markets is transaction costs. Transaction costs on these were quite high. So I would have had to pay, I believe it was 15-20% as a fee if I wanted to sell these options on the market. No matter who bought them on the other side, the exchange was going to take that 15 to 20%.
That's huge.
It's quite large. So I could have done it. It was still a profitable trade if I wanted to get rid of them. But I started to also realize I had ways of hedging my risk by betting against the Seattle Seahawks. So I started hedging each game, waiting for them to hopefully make it to the Super Bowl, which in the end they did. And so fortunately ended up with 8 Super Bowl tickets at face value. And if you've ever looked at Super Bowl tickets, they very much trade way above face value. So was able to turn those around for a profit when the Seattle Seahawks made the Super Bowl, and had a fun party with friends at our apartment.
Yeah. And guess who had to deliver those tickets? To someone he met on Craigslist, because he wasn't there. He asked me to deliver them, so I had to meet some random people I'd never met before. He met on Craigslist to carry these high value tickets with me and exchange them for cash. You're welcome.
Very kind of Rishi to do so. Yeah. But those are the parts of the transaction that obviously you have to take into account when you do any trade, is how do you deliver? You got to deliver your contract if you're trading a contract. But it's all trading in some way when you really think about it, and every market is different in how you execute and how you settle and how you think about potential profit opportunities. So it's a very good question. I think something that you could go on at a long length of the specifics of how they're different. But it looks like we have another question that came in. Question is, Andrew, what was the name of that sector in investing for more creative-minded people that you mentioned? And I'm a structural engineer. What division do you recommend for me to start with? So the area that I mentioned was activist investing. So activist, and I'd say more special situation investing, is an area that oftentimes you can use your creative mindset to find different ways to find opportunities. In general, the investing world requires a creative mind. I think that goes without saying. Some of the most creative people are the ones that can look in places that other people may not think to look. So activist investing, though, I'd say is one area, because it allows you to take a much more active role in a business and say, I think this business could be more profitable if we did X, Y, Z. Private equity is another area where you take a business and you think that it can move into different lines, different business opportunities. You think you can restructure the debt in certain ways to make the business more profitable. All of those require some form of creativity. A structural engineer, and where would I recommend someone with that kind of background going? Rishi, do you have thoughts on this?
Structural engineer, well, I think first, you should ask yourself, what in business or investing interests do you have? I would start from there. I would start from not worrying about your background. Like I said originally, first read, figure out what you want, then practice, then maybe find a way to integrate your major with what your interests are in markets, for example. So first, I would just try to read everything you can about markets, like the Market Wizards books, figure out if any trader speaks to you, and then from there start thinking like, oh, I wonder if I can incorporate my major to find different opportunities other people might miss. Offhand, your ability to probably understand the math behind a lot of these more complicated derivatives will probably be very helpful for you in understanding, or it can be a double-edged sword, it could hurt you, but for the most part, like, you're probably going to have the ability to expand into different product classes because you might have a deeper understanding of the math and the risk involved. You may actually find some of your risk classes you take help you envision how to approach markets. For example, the best markets class I took was an anthropology of sports class. If you replace sports with capitalism, a lot of the analogies hold, and it gave me a framework for looking at markets. So first, I would say, before you even ask, I'm a structural engineer, what do you think I should start with? Like that, I don't know if you're actually interested in structural engineering. So you're saying I'm a structural engineer, but what are you actually interested in? If you tell me what you're interested in, or if you ask yourself, what am I interested in? Or if you don't know yet, that's totally fine too. I didn't know in probably my third year of college after you could, like, it's hard, right? Like, how are you supposed to figure out what you want to do the rest of your life in like these formative 4 years of school? So it's totally fine if you don't know what you're interested in, but that's why I think Quinn and I have recommended like reading, practicing, doing what you can to figure out what your interests are. So I guess, yeah, maybe I wouldn't say I'm a structural engineer, what do you think I would like? I would say, what do you like? And then we can probably recommend something.
It's helpful advice.
Yeah, and feel free to email us because we should probably go soon?
I think we should wrap things up here.
Yeah.
I think that's a positive note to end on. Yeah. We thank you all for tuning in tonight to the first 2018-2019 webinar. Very gracious. Thank you very much, Rishi, for joining us. Again, Tiingo, the sponsor of the NOBE Tiingo National Stock Market Game. The game is competing against all chapters. It's still open for registration to anyone who is not registered, so pass it on to friends within NOBE. Encourage everyone to join. If you have any questions about Tiingo, Rishi is always happy to answer. Shoot us both an email. We're always happy to respond as well. So if you have any other investing specific questions, career advice questions, tool questions, Tiingo obviously is a great resource to use to learn more, but please let us know at any point in time. And with that, thank you again all for joining.
Yeah, and real quick, my email is rishi@tiingo, rishi@tiingo.com. So if you have any questions, you can also email me there.
Great. Cool. Thank you very much.
Take care, everyone.